This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus, you got 9 out of 10 stars from the Coin Bureau guy. Bityard. Hello everybody, welcome back. I'll try and make this video short, but it's about my expectations over the summer. Now, I strongly believe, as we can see on this chart, that we are still in the context of a much bigger downtrend, but it doesn't mean that everything goes straight down forever. That's not the case. We can see that here's your top. Here's the last time we revisited this trend line. We've not yet come up to revisit it again. If we measure this, which was like a capitulation low, all the way up to the top here, was a 45% move. Now, if we were to think about this again between this low and maybe midsummer into July, August, there's about a 50 to 60% move, more or less. That's very realistic to expect that kind of thing to happen. Maybe at some point over the summer we reach this 28 to 29,000 summer lows, very historically relevant over the last 18 months at least anyway. The supports here, supports here, supports here, and a breakdown. So the reason I'm saying that this is my expectation isn't just because I hope for Bitcoin's health. It's just that I've been talking about the everything bounce, haven't I, recently? So this last week, so about 8 days ago, I told everybody quite openly that I'm expecting a big bounce across all stocks and indices, and that I've positioned myself appropriately across the top 4 from the Nasdaq, including the Nasdaq Dow Jones Industrial Average and S&P. I also said that I'm expecting a top to have formed on the on oil, which currently would appear to be true. So it was around about 120. At one point we were down 15. We managed to close it up from 10, but we're still 10% down from the area that I called, which is roughly about $120 barrel. And the Dixie looks like it wants to consolidate. Now I'm not looking for the Dixie to break down. This is fundamentally designed to go up, so long as the Fed keep raising rates and continue with quantitative tightening. But effectively, if we view it on a chart basis, it does have bearish divergence on the daily. It's been having this the whole time, to be honest with you, and it is curling over on the daily MACD as well. So suggesting that a consolidation is also on the cards, and maybe this consolidation could lead into a breakdown that takes us back towards roughly about 100. Now this is a little bit hopium because remember, you can't fight the Fed, and at the moment that's what we're doing. But I'm trying to front run the CPI data, which is how I've managed to call the bottom on these stocks and the top on oil, and that should reflect on CPI data, so inflation data. So I don't know if anyone was around in the last recession, 2008. I remember it vividly. I finished my university course in 2008, stepped outside into the big bad world to basically a depleted job market. It was wrecked city out there. It was very difficult to get a job, and the jobs that you got were pretty crap, and you were grateful for them because the job market was wrecked. This recession, if we get it confirmed, and remember, a recession is confirmed after 2 negative quarters of GDP. Effectively, that's all it takes. And Europe is effectively, there's no getting away from it. You're going to have a recession. Same with, obviously, the UK, which is obviously part of Europe, depending on, how you choose to interpret it. But the US hasn't quite got there yet. They might get away with it, but even if they did get that recession confirmed, it'll be one of the nicest recessions you could ever go through. It's not going to be like 2008. It'll be different. And so to expect everything to behave like it did in 2008 is kind of unrealistic. We're talking about decline in GDP, and the reason for that is because consumers aren't consuming as much. They're acting a little bit more frugal. Inflation is high, so even if they were to be consuming, they consume at a slower rate. But the job markets are okay. In fact, they're the best they've ever been. There's less unemployment on record now than there ever has been in recorded history. That's for America, UK, and from what I understand, the most part of Europe. So jobs aren't the problem. The problem is the amount of money that you get paid doesn't reflect the inflation, which means that you can't consume at the speed that you were doing in the past. So this recession is an easily solved situation, which is just to combat inflation. bring inflation down, things should be okay. Now, there's a number of reasons why inflation is high. We all know about the money printers in 2020 into 2021. That's fine. But there's also oil and food, which is why I've been looking at those tops on oil and thinking that this is going to reflect into the CPI data. Maybe not this time round, but the one after that. But we can try and front run that data ourselves by monitoring oil and monitoring wheat prices, for instance. Oil is the main one, and also the Dixie as well. So I actually think that we're in the midst of what I have coined the everything bounce. I've been talking about the everything bounce. Here you go. It's all here for you to see. And I was calling that 8 days ago, which is where I positioned myself in these major stocks and indexes. And Bitcoin will move through association with that. As we all know, the correlation is quite high. So what I'm saying is, don't be afraid of the word recession. You know, I've been through a recession, and that one was different. That one was a massive collapse in the housing market, which affected pretty much everyone and everything in all kinds of different ways. This one is pretty much just driven by inflation, and if we can get ourselves a handle on that inflation and what's feeding the inflation, or at least partially feeding the inflation, we can expect some higher prices for stocks, and we are not looking for an economic meltdown. Not like 2008. This recession is going to be different. It's going to be different. It's all driven by inflation. I believe that next CPI report will show that it hasn't gone up, at least, and maybe that it's gone down. And then bit by bit, month after month, I expect it to continue to go down. Now, rate hikes will continue, and with those rate hikes will come fear in the market, so we can rally up to these areas here, and then we can start to do the same rinse and repeat situation, which is, you know, oh, we're moving up, we're getting rejection, the fear of the next rate hike kicks in, we're moving up, we get rejection, fear of the next rate hike will continue, and just like a normal bear market for Bitcoin, it will commit to a new low towards the end of its 4-year cycle, which is, as far as I'm concerned, is determined in time-wise between now and either September or towards maybe even December at the latest. So there's quite a long period of time for expecting a new low to be put in, but throughout this time we should also expect some serious rallies. And if we rallied from the bottom towards the top of this summer low, which is clearly going to be a resistance, we're talking 64% move from the bottom up to here, we should expect a rejection around there, and probably throughout the later part of the year print a new low. And it's at that point where the absolute low is almost guaranteed to be put in, regardless of what the news say about recessions and blah 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 blah. Inflation is likely to be high for a little while, but I think periodically, month after month, it should start to get lower and lower and lower. The only thing that's going to change all of this is the price of oil, and really what we want to see is oil start to close price below 106, which is below the center of this Bollinger Band, and bit by bit we will see oil prices go down, and I think it'll even out around about $75 for a barrel, and I think that's where it'll mostly stay, and that's gonna help inflation data anyway. Never mind the rate hikes that are going on, never mind all this other stuff that's going on. Oil prices are key. So oil prices below 110 should help inflation anyway. Oil prices below 106 will really significantly help, because it basically looks like a breakdown on the chart, and we should start to stabilize at a lower price. So in long story short, I expect uptrend now between now and the next couple of months. June, July, I think we're going to be uptrending, maybe even into August potentially, and then we will finally break down, reach a new low as we approach that September, October, November, where we look to print the new low for Bitcoin, marking the end of the bear market, where most of us have got our eyes peeled and ready to go hard and heavy into not just Bitcoin, but some of those top cap altcoins that we've been eyeing the entire time, for what will be a breakout of this descending trend line that we are currently in, and will probably remain in until we finally break out of it around about September, October, November, marking the new bull market beginning. And when Bitcoin turns around, it does turn around fast. It does turn around fast. I can tell you that now. This is what it did before. Everybody was telling me, "Oh, you should never buy Bitcoin. What are you doing? What are you doing, you idiot?" Oh. Is it too late to buy Bitcoin? I'll buy it. Ah, wrecked city. Okay, all right. I'll leave it. I'll sell low. Okay, let me. Oh, Elon Musk has bought it. Let me buy some. Yeah, this is whoa, wrecked city. Listen, in order to play financial markets, you do have to incur risk, and usually the risk feels worse as you're buying into red candles, especially when you've seen a decline of whether it be 70 or 80% or wherever it is that Bitcoin manages to go down to. Targeting areas of 12,000 is not unrealistic, but not immediately, like towards the end of this year. Once this is broken out of this and it starts a new cycle, which again will already be underway next year, the turnaround will be fast, just like it was before. It'll be just like that again. I made this video, I think it was yesterday or the day before, about the cycles and the cycle history, but the majority of the price action takes place between halving events. I have people talk to me about, I'm not buying until the halving, we're going to be going down until the halving. Well, that's not how it works, to be honest with you, mate. The halving is just like a non-event, really. The bull market top, the bear market bottom, these are halvings. So we've got a halving, we've led up into the halving, we've rallied after it, we've found a peak, we've found a bottom, we've rallied into the next halving, we've rallied up, found a peak, found a bottom, rallied up into the next halving, found a peak, found a bottom, we'll rally up into the next halving again, which is around May 2024, right? So, the majority of this downtrend has already been played. Right, it's already been played, and if you ask me now, on a TA basis, we'd be looking for probably between 12 and 14,000 for the low to be formed, which would mean that this bear market was probably going to play out a little bit like this. Now we will find a low and we will rally up into the halving, where we find a little dip and we carry on and we make a new all-time high, finding a peak again in 2024, 5, 6, wherever it might be, in between the halving events. Anyway, that's enough. I've probably blown your mind. It is Saturday. We're supposed to enjoy ourselves. That's recession, that's halvings, that's cycles, that's everything. Hopefully you've digested that to an extent, and let me know your thoughts in the comments. Anyway, I hope you have a nice weekend. Take it easy. My Telegram is free. Just join that. If you want to take it one step further, join the Patreon. We do live streams twice a week. But the most important thing is to not panic. The majority of the downtrend has already been played. The word recession is just a word. It's not like the last one. The thing is inflation. We think we've got a handle on that. Monitoring oil and Dixie. And just enjoy the red, because the red will make you rich. Look, we're almost ready to place a bottom in this market. We're getting ready to place the bottom already. On a time-wise cycle basis, it's almost there. So look, don't flap around and panic. This is the time that you've all been waiting for. This is the most important thing that you could be looking at right now, which is monitoring the downtrend on Bitcoin, getting ready to either incrementally buy in a dollar cost average sense, or wait for the low to be formed between September and December. But either way, dollar cost averaging from this point forward is going to be very rewarding, because as we can see, cycle basis would tell us that the peak is formed in the middle and the low is formed in the middle. That's the same thing again here. Look, this is the portion now where peak to low is formed, and then shortly after this is going to be the next run up. Screw your heads on, think about things rationally. It's rinse and repeat. It's a cycle. This is what happens. We're getting towards the end of the cycle, getting ready for a new one. Enjoy it, prepare for it, and subscribe to the channel. Thanks for watching, guys. Hope you have a nice day, and take it easy.